Cool. Hey, Ron.
Hey, buddy, how are you doing?
I'm good. Uh, glad we were able to finally get on a call. I know the times have been kind of crazy these days with this coronavirus stuff, huh?
It is working from home more than ever.
Totally, man, totally. So for anybody that doesn't know, I met Ron here about a month ago in Dallas at a sales conference, and we were just chatting, and Ron told me he does tax planning. And for me, I was like, oh, so Ron, you're a CPA. I'm sure you get that a lot, right?
Yep, yep.
Um, and Ron actually blew my mind. I I've been a business owner now almost 10 years. Um, not once as a CPA uh, or have I ever heard about tax planning. So, um, Ron, why don't you give me just like a real like quick rundown of what tax planning is?
Yeah, so there's I'll just kind of break down the whole team. Are you an accountant? Are you a CPA? Or like the most common questions, for sure. Uh,
Yeah.
and taxes and accounting kind of get lumped together a lot.
Yeah.
So let me kind of break down the industry, and then as everyone kind of looks at this, they can kind of talk about, oh, they can see where they fit or who they have on their team.
Yeah.
So bookkeeper usually does all the day-to-day transactions. You can literally watch a few YouTube videos, call yourself a bookkeeper. It can be in-house or outsourced. It doesn't really matter. An accountant is someone who's gone to school for this. And so they have a 4-year college degree. Usually you get more sophisticated type accounting where you have monthly balance sheets, cash flow statements, income statements, projections, that kind of stuff. Uh, Separately from the degree at number 2, you can go take a private designation test. That's just someone trademarked CPA 30 years ago, and it caught traction. So everyone knows certified public accountant now. An EA is a IRS enrolled agent. Uh, I always describe it this way. An EA and a CPA are very, very similar. Unless you ask an EA or a CPA, they think they're worlds apart. But there is a few things a CPA can do that an EA can't. But essentially, as an EA, you've passed the IRS's exam. As a CPA, there's a private one that you've passed. But all of these are trying to get you to tax prep, which is this end of the year tax filing that we all have to go do.
Yeah.
And then as the business grows, you can have a controller, tax resolution expert who's negotiating with the IRS for you, tax planner, CFO, chief financial officer. So you got usually your CEOs in charge. Picture a triangle, CFO and a COO, operations guy, finance guy, and the CEO is leading the whole pack. And then a tax attorney. And so that's the level of sophistication, like top to bottom,
Mm-hmm.
uh, as well. And that's kind of the whole tax and accounting team that you could have to get started.
Gotcha.
So, we have all of those. We have tax attorneys, we have CPAs, we have accountants, we have bookkeepers, all that stuff. My expertise is in the tax planning space and also the CFO space. So I'm a CFO for about 6 different companies right now.
Okay. So when you and I were talking in Dallas, you brought up, a ton of knowledge for me. And the one thing that always, I know that my clients and anybody that I know, they're going to be asking is, how can they pay less for taxes as
Yeah,
a business owner?
yeah. That's usually around the process quite a bit. And what most business owners do is they go out and make business decisions all year long, gather all their documents at the end of the year, go to their tax preparer or go to their CPA to prepare their taxes.
Mm-hmm.
Uh, and at the end of the year, everything's kind of already said and done. So at that point, the accountant or the CPA is just trying to identify what those business activities were, put them in the right category, identify it, put it in the right category, put it in the right box, file that form timely, and that's their job. But it's all done at the end of the year. So if a business owner really wants to pay less, he really needs to back up. And like this time of year, we're in March 31st today. This time of year is a crazy busy year for us looking forward. If your CPA is crazy busy right now, they're looking backwards. They're looking at 2019. Most tax planners are looking at 2020 going, how can I make this a killer year for my clients going forward? What can we implement so that we can double our revenues and reduce our taxes?
Gotcha. So what if my clients already do the end of the year tax planning?
Yeah, so that's almost that's a common expression in the industry for sure. But it is also kind of an oxymoron. Like at the end of the year, there is nothing yet left to plan. At best, it's a projection. Like, let's look at this last couple of years and adjust that last quarterly payment or something. But it's not really going to be true planning, because planning happens by definition in advance of the activity, right?
Yeah.
So yeah, end of the year tax planning is common and a misconception for most business owners because it's too late, too little, too late in most.
Gotcha. So if it's too little, too late, then, I mean, so what is tax planning and what exactly does your team do then?
So we look at this more holistically, and we're trying to say, tell me about your business, tell me about your day-to-day activities, and we're looking for little clues that tells us that they're either already doing something they qualify for that they're not doing, or we're saying, you're already doing this, this, and this. If you add this one other activity and we document it properly, you now qualify for this other new tax deduction or a tax credit or a tax exemption. So we're just trying to identify how can we get them additional benefits that are already written in the tax code, for sure. So when you think about it, like the Congress passes the code, right?
Okay.
So they're gonna write laws that either benefit themselves, that benefit their constituents, and that's how a law gets passed. And then it gets sent over to the Treasury Department. The Treasury Department defines it. Then it gets sent over to the IRS, and the IRS has to enforce whatever they get from Congress and Treasury. So it's a lot like the policeman who's running the radar gun in a 35-mile-an-hour zone. He could think that it should be 25, but he can't enforce 25 if it's posted at 35.
Okay.
That makes sense?
Yeah, that makes sense.
Because he doesn't write the laws. It's already been posted that it's 35, you can drive 35, assuming it's not a hailstorm or windstorm or something. And so all these laws are on the books already, and big companies already use them. I think most people know Amazon didn't pay taxes for 20-something years, right?
Yeah.
Warren Buffett, like, we don't see everyone's tax returns, right? They're private, but every once in a while they get leaked. In 2010, we were able to see Warren Buffett's tax return. He made $39 million of income that year, and he paid an effective 17% tax. His secretary made about $150,000 that year, and she paid I think it was 32 or 34% tax. So twice as much as in a rate.
Yeah.
Even though she made 150, he made
39.
Yeah, 39 million.
Something's not right there.
So clearly everyone loves Warren, right? He's not playing in a gray area. These are legal, moral, ethical things that are clearly in the tax code that small business owners just don't know about.
Yeah. Can you give me some examples of some of these laws that people may not know about that could help benefit them?
Oh, for sure. We'll do 2 or 3 that maybe they've even heard about, but maybe they are not applying. What I see a lot is someone started their business with a certain type of entity. Oh, my buddy is a sole proprietor, so he just told me to be a sole proprietor. I'm still a sole proprietor. I was working with a glass company not too long ago, and that's what he was doing. and the CPAs told him take 50% of the money as, as wages, and then take another 50% as profits. And as a sole proprietor, it all flows through. So he's paying self-employment tax on that entire amount, which is self-employment taxes are 15.3% total. And so we converted him to an S Corp, identified his wages, and was able to eliminate the 15.3% on half of his income. We did this with another company who, same thing, CPA told him to do 50-50, which is super common in the industry. Take some as wages, take some as profits as an owner. That person, it was totally fine when it was like $100,000 a year. But now that his business is doing $1 million a year, he's still following the same formula at 50-50. And we were able to reduce the 50% to what they call reasonable compensation. And what's reasonable, he wouldn't hire someone to work for $500,000 a year to go replace windshields. So
Yeah.
We ran a report, got a reasonable compensation report, identified what that number was. I want to say it was like 70 grand or something like that. And everything above that was then moved to what he took as profits, and again, eliminated some self-employment tax. So there's some simple strategies, and maybe it's even a different entity. So that's two different types of entities, but maybe there's multiple entities. Maybe you should have an operating company and a holding company, or a family management company or something like that, so that you have two entities. You can take some strategies in this one, you can take some other strategies in this one, but they do business together. And so that could be a really common one.
Okay.
Another one, I think, I don't want to say most, a lot of people have certainly heard that you could hire your family or hire your kids to work in your business.
Yeah, I've heard that.
For years, that was about, $6,000 a year is what you could pay your child. What a lot of people don't know is when Trump did his tax plan, this Tax Cut and Jobs Act that became effective in 2018, that went to $12,000. So it doubled. They eliminated a lot of tax deductions, but they doubled the standard deduction to $12,000. So now you can pay your child $12,000 a year. It's deductible for you as the business owner. And at 12, they don't even have to file a tax return. $12,000 a year. So it's deductible for the business and completely tax exempt for the child. Take that one step further, you could actually, once you have earned income, anyone at any age has earned income, not passive income, portfolio income, investment income. Mm-hmm. They're working in the business, now they have earned income, they qualify to contribute to an IRA. And so that's $6,000 a year. So now you've got per child, you can go to $18,000 a year. That money comes out of your business, tax deductible, goes to the child tax-free. You put it in a Roth IRA, which wouldn't give you the deduction this year. And at $18,000, we would have to file a return. You can either pay a little bit of tax on that $6,000 contribution, or you can do a traditional IRA and make it deductible, and they'll pay zero. But now they've got their own college fund, because the money can come out of a traditional IRA for college, first-time home purchase, all kinds of stuff. But start multiplying that out. If you've got one kid, there's 18 grand. You've got two children, that's $36,000. You got three children, there's $54,000. The biggest family I've worked with, he had 10 kids. He's back in New York. Sweet guy. It's just a short little Jewish guy. 10 kids, 7 of them qualified to work in the business at $12,000 a pop. He's like, Ron, that's a lot. And I'm like, we need to document it properly. There's a whole process around how to employ your children. But yeah, 7 times 12 made a big difference in his tax return that next year.
So 8-year-old twin daughters, they could become employees, huh?
How old are they?
8.
Yes. Yeah. So here's the cool part. There is no minimum age in the code.
Okay.
So there is a maximum age. You can do this up to age 18. And then there's other strategies if you can do it beyond age 18. But this one, it says age 18 but with no minimum, right? So when there's not something in the code, we always go to the court cases to try to figure out, like, how's this going to be defined? The youngest one we could find, the youngest age where it was upheld by the courts, was age 7. And it wasn't that age 6 or 5-year-olds were eliminated because of their age.
Mm-hmm.
Excuse me. They were eliminated because mom and dad took the money from the business account and moved it to mom and dad's account, which is not what you do with employee money, right?
Yeah.
So if they're truly an employee, it goes from the business account over to the child's account. The child is a minor, can't have a bank account without mom and dad being a cosigner. So you go get them their own account, move it that way. And then as a parent, you probably are going to hold a separate debit card to make sure that they spend the money the way you should as a parent.
Yep.
But interestingly, 7 isn't in the code. It's the youngest court case we could find, but my belief is there's 5 and 6-year-olds that could qualify for sure if we find some job appropriate duties for them.
Filing paperwork, shredding papers, stuff like that. Yeah.
I've seen, and ability makes a big difference. So I've seen like 14-year-olds, all they're qualified to do is shred paper and refill staplers. I've also seen 8-year-olds. I think you and I both know someone who has an 8-year-old, taught him this strategy, and literally the next week, there was a video of him on Facebook with his 8-year-old building websites.
Yeah.
Super competent young lady.
Yep.
So yeah, child ability makes a big, big difference in when that would be appropriate. But yeah, twin daughters for sure. It's
cool. That sounds like I need to be putting them to work.
And I think we've defined, because we've done this so long, I think we have like 43 or 45 job duties that we've been able to identify over the years of things that kids could do in the company. I mean, like, come on. It has to be a reasonable wage, right? Everything in the IRS code has to be reasonable and customary. So you can't just throw your kid's picture up on your Facebook page and go, oh, I've got the Gerber baby. That's worth $1 million, right? But come on, the kids get social media way better than we do, right?
Yeah. Yeah.
So go get some social media comps of what something would cost you to outsource that kind of stuff, and then train them how to go do it. And even if you're paying them half as much, a good social media manager would charge you $2,000, $3,000, $4,000 a month. But so if you're paying them $500 a month or $1,000 a month for a safe job, that makes sense. That's one example of what you do with kids. What's another one? Entity structure, kids. So most people know about home office. And home office isn't my favorite deduction just because it's only a percentage of the house. So if I live in a 2,000 square foot house, let's do 1,000 for round numbers. Everyone loves tens. 1,000 square foot house, 100 square foot office, 10% of the home is deductible until you sell the home, and then there's a recapture on it. So there's a strategy that you have to go through to make sure that doesn't happen. But most people have never used the home conference room rule. And if you've spoken with an attorney around how to asset protect yourself, you understand that there should be some corporate meetings and resolutions and amendments that you do frequently throughout the year. We should be documenting all of our major decisions and some routine decisions. Like even as an LLC, you don't have to follow the corporate rules, but you do absolutely have to have annual meetings, and most major decisions still should be documented. So if you're going to have a meeting, just say once a month in your own house, then there's a rule that came out of Augusta, Georgia. And if you go Google Augusta rule, it's readily available on the internet, but yet most people have never heard of it.
Yeah.
It says, when is you renting your house out to someone else? When is it a business and when is it a hobby? And as a hobby, they don't want to know anything about it. In fact, I think I have that one. Let me show it to you real quick.
Okay.
Because it's almost too good to be true. People don't believe it unless they see it from the code. So this is publication 527. And this is really trying to tell us when is this a residential house, when is it a rental property, when is it a vacation home. And if we bounce down to page, I want to say 17. Let me zoom in real quick so everyone can see it. There's a special rule if you use your dwelling unit as a home and you rented it for less than 15 days during the year. So I love special rules. Like that's a lot of times that's how I find stuff. I want to find special rules, exceptions, exemptions. But dwelling unit wasn't real clear to me. So as they define it for us, a dwelling unit includes a house and apartment. So we don't have to own it, right? If an apartment qualifies, it has nothing to do with ownership. Condominium, mobile home, a boat, vacation home, or any similar property, so long as you have sleeping space, toilet, and cooking facilities. So
Okay.
what?
That's pretty much anything that you're, I mean,
Yeah.
That's an RV. That's a fifth wheel.
Exactly. I've got a client who had a boat, had plenty of sleeping space, had a toilet, but he didn't have cooking facilities. Like that's usually reserved for a little bit bigger boats. So he went out and bought one of those barbecuers that mounted right on the rails, like $150 or something. So now he's got cooking facilities.
So now he qualifies for the rule.
Yeah.
Nice.
So that's the property that qualifies. Let's show the tax benefit to it. This is page 19. If you use your dwelling unit as a home, and so this doesn't work for rentals, just so everyone's real clear. This is your home. You use it or rent it for less than 15 days during the year. Its primary function is not considered to be a rental, and it should not be reported on Schedule E. Schedule E is where all your real estate shows up. You are not required to report the rental income or the rental expenses from this activity. So 3 times in one paragraph, they just said, don't ask, don't tell.
Nice.
14 days, we don't want to know about it. Do not report it. So if I call the local hotel and I say, hey, I'm in a 1,500 square foot house, how much does a conference room run for 1,500 square feet? And they say $1,000 a day. Now that's reasonable based on my square footage in my area. So I did this for a client in Montana. Let me pull up a calculator real quick. Everyone sees the math. We did about $800 a day in the middle of Montana times 14 days. So he was able to pull out $11,200 for using this strategy. That same client in New York with 10 kids, he had about a 4,300 or maybe it was a 4,500 square foot house. And I don't know if you guys have ever tried to rent a conference room in New York, like downtown Manhattan.
It's pretty expensive, I'm sure.
It's ridiculous. So everyone is union down there, right? So it was $15,400 a day.
Wow.
14, and granted, he had a bigger house for sure. So for the same strategy for that gentleman was about $215,000 is what's reasonable for him with the big house in downtown Manhattan versus a starter home in Montana. Same strategy, very, very different number.
Yeah.
For sure. But the key is don't go, even if you go to 15 days, you lose the first 14. So just never go over. And sometimes this is called the Airbnb deduction because it kind of came out for that. Most common is Augusta because the senator from Augusta, Georgia had a house on a golf tournament. That's where they have that Masters tournament.
Yep.
And so he wanted to rent his house out for the Masters tournament and not pay taxes on it. So guess what he got passed? He got passed a law so he could rent his house out in Augusta, Georgia for the golf tournament and not pay money.
Perfect. So let's see. So those are some great, obviously, rules or deductions. I'm not quite sure. I don't speak the tax planner language, but in order to, God, save people a ton of money. So, so if somebody works with you, do you guys replace their CPA? Do you become their CPA? Do they have to get rid of their CPA? Like, how does that work?
That's a good question. Let me go back to this real quick. So we have all those people, but the tax plan really can be a standalone service all by itself. So we can just analyze last year's tax return and give you stuff that you're missing, and you can turn around and take it back to your own CPA. Frequently, maybe 40, 50% of the time, somewhere in there, sooner or later, business owners start to outgrow their professional team. They'll outgrow the attorney they started with, and they'll need a better attorney. They'll outgrow the CPA they started with, and they'll need a better CPA. Or they started with a bookkeeper and they need an accountant, and then they outgrow the accountant, and then they'll want a CPA. So we can do the tax planning solo, all by itself. They can keep that relationship intact. Sooner or later, they start to realize they've outgrown it, and then if they want us to step in, we can and offer all those services. But it's not you have to hire us for everything or nothing kind of thing.
Okay.
The tax planning structure can stand. We say we share the strategy. We share all of the tax code, all of the revenue rulings, any relevant court cases, any deadlines, landmines, any kind of private ruling letters from the IRS, any kind of treasury decisions that they've done. All of those things will all be included in the plan. And so it's a super simple, that all sounds complicated because the way they write it, it's attorneys writing all that stuff.
Yeah.
So we give a layman's description of the strategy and how to implement it. Then we give you at the end of every strategy, all of that legal stuff. So you could literally take our tax plan, hand it to any CPA and say, here's the code. It's legal, moral, and ethical. Let's do this. They usually get it.
Is there CPAs that know this better that you work with than your average CPA out there?
Yeah, we train dozens and dozens of CPAs a year outside of just our normal practice.
Yeah.
Once the light bulb, and not everyone is into continuing education, but there's literally nothing bless their hearts, the CPAs have a tough job. Their exam is tough. Remember the old phone books? Remember it, like in a big city, we'd have this 3-inch, 4-inch phone book.
Yep.
The study guide for the CPA exam is like that.
Okay.
4 volumes. Like, it's a stupid hard exam. And not one bit of it teaches them how to reduce your taxes. It teaches them all the laws, how to identify the activity, where to put the money on the form, file that form timely. None of it says, hey, Spencer, did you realize if you do this and you do this other thing, you now qualify for this third thing? And
Yeah.
that's going to reduce your taxes by $27,352. Like, that's nowhere there.
Yeah.
For sure.
So what's the process if somebody wants to start working with your company?
Yeah. So right below this video, we're going to embed a link for your team. And that link will track them, and they'll know that they're coming from you. And we'll just take care of them. The process will be something as simple as a strategy session, and we'll understand their business a little bit. And they really have 2 options. Once we see that we can help them a little bit, if they want us to do a quick review, if they want to bring the tax plans to the appointment, we do appointments just like this. So if they have them electronically, they can just pull them up on the screen. We share the screen. I can analyze their returns real quick. More than half the people don't even have their returns, but we just talk through what they're doing, what their current structure is. And we have some templated tax plans, anything from like a startup company, they're just coming out of the gate, all the way up to super high-end companies. Or if they want a custom written one, that they want to know that every strategy is going to apply to them, and then we have that as well.
Mm-hmm.
and we can just talk through what we can do. If we can add value to them and reduce their taxes, we will. In general, what our target is if they're going to spend $1 in tax planning, we want them to save $3 to $5 in taxes.
Okay. So it's not expensive, because I know a lot of my clients are going to be thinking, God, this sounds great and all, but there's no way I can afford Ron.
Yeah, and that's where, like a business owner, we're almost ingrained. Like, what's an expense versus, it's just an expense versus sometimes is it the benefit, and sometimes we ignore the benefit because it's just a cash flow thing. So in fact, let me pull this up. This is just a snapshot of some of the other clients and some of the other industries we've been able to help. Auto glass company cut them out $35,000 in their first year. This diesel shop guy, $112,000 the first year. And you can kind of go through all these different niches where we've been able to save people some money. It's just ridiculous. So I think it's Forbes. I'm certain it's Forbes in their article almost 6, 7, 8 years ago said that 93% of business owners overpay their taxes by 10 grand or more. And so you're giving away the money.
They might as well just said everybody.
Yeah, 93%. Yeah, you might as well, for sure. And so this is as simple as our service feels free because of the value we're bringing to the table. You're going to pay dramatically less in your tax bill. And then, like, this is just first year stuff. Once you have the strategies, like, the ROI on this gets better and better and better. The longer you have these strategies in place, you don't, and that's a good point to make. You should have a business plan that you write every single year for your business. You should have a financial plan that you write every year on how you're going to invest your money. You do not need a tax plan. If we do our job right, you should not need a tax plan every single year.
Okay.
For sure. So
this is kind of a one-time appointment, or a one-time yearly or 1 year thing that can be reapplied year after year after year if they're doing things correctly.
Yeah. And until something dramatically changes in their business. So if they triple their business, then maybe they need more strategies, right? So maybe they come back through and they say, I'm just starting out, then here's 10 strategies to get you going. And then a year later, if they're at 250,000, like, that's a very different business. So they're going to need more strategies. $1 million a year revenue business needs very different strategies than $250,000 a year business.
Yeah.
If you've gone from 0 employees to now 15 employees, so some of those activities, you want to buy your competitor. That's a different strategy than just normal business stuff. If you want to sell your business, the exit strategies implemented. We're working on 3 different businesses right now that are selling, and they're going to be able to, 2 of them are going to be able to pull the money out tax-free. One of them is going to be able to defer the taxes for 30 years.
Wow.
On selling their multi-million-dollar business. Really cool stuff. So activities tend to generate when you need a freshen up. And as we go through the strategies and the tax plans, we'll always identify those for people.
Gotcha. Sure. So correct me if I'm wrong. It sounds like you're able to help the small business owner all the way up into larger corporations, right?
Yeah. Yeah. The buyer of one of the businesses we're helping right now is $1 billion a year business.
Okay.
Yeah, for sure.
You said billion with a B?
Yeah.
Wow. Yeah. That's huge, man. Well, Ron, I know you're busy with the crazy stuff going on, SBA loan type stuff, and then tax planning. This is the time of the year that you're probably just cranking things out, especially with the coronavirus stuff. But I appreciate you taking the time, and I look forward to sending people over, man. I'm really excited to work with you personally to help me save money, because if 93%, I'm pretty sure I fall in that 93% category, I'm overpaying for taxes. And if I don't have to pay Uncle Sam any more money than I have to, then why should I? So Anyway, I appreciate it, man. And I look forward to doing business and hopefully sending some folks your way.
Yeah, and I'm excited to help them because this really is a game changer for business owners once they realize what's on the books that they could take advantage of. You don't have to be a big business to take advantage of some of this stuff. So I look forward to taking care of your clients and showing them that we work hard enough as business owners. We work hard enough for our money. Earning it is one skill. Keeping it is another skill altogether. So that's where we come in.
Totally.
All
Cool,
right.
man. I appreciate the call. Chat with you soon.
Okay. Take care. Bye-bye.
Yeah.